Let's connect with Viju George, Executive Director with JP Morgan, and let's understand the dynamics of Indian IT sector and how they are shaping up. Viju, morning. Thank you for joining us. All four large companies have declared their numbers, and looks like there is a huge disparity in what TCS has guided, what Infosys has admitted, how Wipro has shared their future outlook given versus what HCL has guided.
Sure. Hi. Good morning. That's correct. I think the results might point to a mixed picture as far as the health of near-term demand is concerned. But this is not surprising because we have been saying for a while now that in terms of industry growth slowing down 11 to 14%, you will have polarization in performance within the large cap sector. So if there are certain players like a TCS, Cognizant, etc., we should go well ahead of 15%. And there would be, by definition, others who should come well below that. So I think what you're seeing is that really play out. That polarization of performance in the large caps today is much more than 04 to 08 in terms of a slower growth industry. Point one. Point two, of course, is that we must not forget the fact that certain companies are facing structural issues of their own, and we particularly highlight Infosys here, which we've been talking for a while now. So they do have a fairly ambitious agenda to get things back on track. So clearly it's a mix of both these factors at play.
Viju, hi, morning. The quarterly performance and the outlook commentary from the management has been a little confusing. I mean, which side would you be on? Is the demand environment bleak, as Infosys management points out, or is it showing signs of improvement, as TCS is indicating? So how would you peg the big four now?
No, I think the demand environment is better today than 3 to 6 months back. I do think that data points in the US are easing, and this will translate the lag into better returns for those focused on winning market share. See, with Infosys, I think there are company-specific issues, and they're just blaming the environment for the things that are impacting them at the company-specific level. I think it just goes back to who's winning market share in this environment, and clearly, if you have to win market share, you're winning it against your peers, as opposed to 04 to 08. So I guess those who are winning market share against their peers in common accounts, common client accounts, obviously find it going very good. That said, I would not say that this is the last thing on the matter, because we'd have Cognizant declaring in early May, and that should give you a good sense of where the direction is going. My sense is they'll be all right. So on balance, I think the demand certainly is better today than 3 to 6 months back. It's just that some companies are just gaining market share at greater expense of the peers.
What is the pecking order for you, Viju? Considering you've been the first one to point out the structural issues faced by Infi, and I identified that.
Yeah. Yes, I think the pecking order would be TCS, Wipro, HCL Tech, and Infosys in that order. Yes. Let me just take you through the upsides that we're looking at. TCS, we're looking at a barely 10% upside. That's considering the stocks moved up so much. But we think that's the stock to hold, because being a large cap stock, investors don't have any confidence, or do not have much confidence in Infosys getting its act together. So clearly that remains a stock to go to. From a differentiated performance, we still think we're giving benefit to Wipro. Despite a not so enthusing Q1 FY13 guidance, we think it's a one-off, and we think the company can get its act together, starting Q2 FY13. And therefore, from a upside potential perspective, Wipro can actually give you anywhere between 15 to 20% in 1 year's time. HCL has been a good performer. Clearly, they are winning market share, not just against Indian competitors, but more against the global counterparts like IBM and Accenture. So we should see 10 to 12% there. The real laggard is Infosys. Unless it can get its issues back together and resolve them, meaningfully, I think even meeting that guidance of 8 to 10% on organic basis looks difficult.
But what to your mind are the chances that Infosys could really get the mojo back? I mean, they have a utilization rate of 70%. If demand environment picks up, they could surprise you on the upside, because they are still hiring.
Yes. See, the two ways to look at this, sorry, you had a question?
No, please go ahead.
Okay. No, there's two ways. Yeah, there are two ways to look at it. One is that, your utilization is low because you've not been able to generate demand. So, saying that utilization is low and therefore I'm in a position to capitalize on demand as and when it comes, I don't think it's a fair argument, because the fact remains you should be in a position to capitalize on the demand. Today, I think Infosys' ability to generate or capitalize on demand is certainly much weaker today than 1 year back, than 6 months back, etc. So, in that sense, you're actually making an error, trying to hire and keep utilization low, because that limits your ability to actually give wage increases. So I suspect that some part of Infosys' decision in not to give wage increases and to freeze wage hikes, has to do with a very high bench that they have, and so it solves more problems than it resolves, in my view, because if you're not able to generate demand, then utilization can be a problem for you, or low utilization can be a problem for you.
You think HCL could be the dark horse for FY13? Because if I look at the P multiple for HCL Tech, it's not very demanding. HCL on a sequential basis has surprised everyone. And if I look at the color of the management commentary, they are sounding bullish.
Yeah, true. We think, together with TCS, HCL Tech could be, the faster growing companies in FY13. Our view is that we have not taken necessarily, we think it will be more of an earnings-led, return for investors here. We have not taken a multiple upgradation, and for us the multiple stands at about 13.5 times. Sure, if they're able to manage this growth with better margins, then I think you could see that being a dark horse. But if the margins remain where they are currently, I think you're just going to get earnings-based upside. That said, I think the visibility that they get from $2.5 billion of deals won in the past 2 quarters, really give them, visibility in FY13, which a lot of other companies are struggling with at this point in time.
Vijay, you've talked about as to how the key is market share going forward, but what about the sluggishness that we've seen in the BFSI segment, and that has pretty much been the case across the board? I mean, can the largest segment turn into the biggest headache going forward?
Yeah, sure. See, in BFSI segment, I would probably, look at it in sub-segments. You do have retail commercial banking, you do have investment banking, you do have insurance. From what I understand, the pressures might be more in the investment banking segment. So for those companies, that do have certain problem accounts here, yes, they might have to. They may have some issues here, but the other 2 sub-segments I think are doing fairly okay. So I don't sense a situation where BFSI revenue should decline here going forward. Yes, it is possible that revenues from this vertical might be slower than the industry average, 11 to 14%, which is an okay outcome, because a lot of your other smaller verticals and even manufacturing is picking up now are growing much faster to be able to take that, compensate for that. So I don't think that I'm very worried about that. The only problem area, at least as far as our studies indicate so far, are your investment banking business.
Viju, a one-line answer. Do you think in next 12 months TCS or HCL Tech could appreciate by 10%?
By 10%, yes.
Yeah.